Hey, what's up guys? John here. We're witnessing something huge in the mortgage market, and I think this could be a signal that we're stepping into an incredible time to invest in real estate. And what is that signal? Well, we're seeing Bank of America, and Better.com, and Wells Fargo, and Rocket Mortgage, and all these large companies laying off entire divisions in their lending arm. This is so important and such a great sign because it means that there's less buyers that are stepping forward and lending standards are changing, and that the market is much more volatile. And so there's going to be less volume. And during this period, we're going to have a lot of home sellers that are going to have their expectations brought down to reality. And so during this period could be a great time for you to run out there and invest in a single family home or a multifamily property. You know, you always hear that saying, it's true, is you want to buy when there's blood in the street, sometimes even if it's your own. This is a very true statement because the last couple of years, it's been a nonstop euphoric like temperament in the housing market, especially in a lot of the hot markets like South Florida, all over the country. There's been, a massive appreciation across the real estate space. People are overpaying for property. But now I think this could be a sign. It could be a moment in which you could really get a great deal coming very, very soon. I believe that home ownership is a very, very important building block into the middle class, into having a nest egg, into building wealth. You look at the middle class is built on the 3-bedroom, 2-bathroom house. And this, I think, is going to be very true. The key here is going to just make sure you have great credit, you have a great strategy, you understand what you're doing, and you're really following the market and paying attention. So look at this. This is what I think is a really good thing for home buyers and wannabe investors. More Wells layoffs, Loan Depot cuts, better SEC probe, and more mortgage news that you may have missed. Now, another interesting facet that's going to happen here in the mortgage market is that we're going to start to see home sellers question the 6% commission. They're going to see the price of their home slowly start to come down, and they're going to want to sell that property, and they're going to want to get as much money out of it as possible. And paying a 6% commission is probably not going to be in the scope and what a lot of home sellers want to pay. They might go to 5%, might go to 4%. We're going to see a lot more brokers desperate to make sales to reduce their commission. And I think during this entire period, as we're seeing mortgage layoffs, we're going to see more layoffs across the real estate industry. Like we're already seeing at Compass, we're seeing at Redfin. We're going to start seeing this at title offices, escrow officers. All these companies are going to start to issue layoffs, I think, very soon as volume starts to dry up. And I think that what's going to be unique about this upcoming downturn in the housing market compared to what we've seen in, say, 2008, 2008 was solved by humans and created by humans. This upcoming downturn is going to be solved by tech and AI and blockchain and robotics. And this is all going to have a really big part of this correction. This is going to solve a lot of these problems. They're going to really start taking advantage of these high fees that a lot of these vendors are charging, and they're going to start to streamline it through technology and drive costs down, which is going to, I think, eliminate a lot of these jobs over the coming 5 years. Look at this. Wells Fargo mortgage layoffs are likely. Layoffs in Wells Fargo mortgage division will likely continue over the next few months as rising interest rates erode the banking's refinance business. Executive said on Friday, incomes from home lending fell to $972 million during the second quarter of 2022, a 53% decrease from more than $2 billion during the same quarter last year. Further declines in the third quarter are possible since the mortgage market is expected to remain challenging in the near future, Chief Financial Officer said Friday in a call with analysts. Better.com discloses another massive loss. The lender lost $327.7 million in the first quarter and cut 72% of its workforce over 6 months, according to a disclosure from the Securities and Exchange Commission. Now, if that's not a sign that the mortgage market is going through a massive change, I don't know what is. 72% of their workforce, $327 million in just the first quarter. Additionally, their merger of Better.com with Agora Acquisition Corp. that the company to take public is now expected in the third quarter. The report loss in the first 3 months of the year exceeded the net loss of $303.8 million over the entirety of 2021. Last week, Better announced a new slate of executives following a tumultuous year after a massive layoff over Zoom in December. loanDepot is cutting 2,000 workers through the end of the year. The lender unveiled its vision for the 2025 plan, in which it will spend between $34.5 million and $40.5 million in total to trim payroll, shed real estate, reduce spending, and restructure operations. The change will save the company approximately $375 million to $400 million in annualized savings, it said. In its latest earnings report, loanDepot reported a net loss of $91.3 million. In the first quarter, in this new plan, a total of 4,800 employees will lose their jobs by the end of the year. Executives said it will increase investments into servicing operations, which are expected to increase in the face of an economic downturn. Republicans urge FHFA to crack down on Fannie-Freddie activities. House Republicans called on Director of the Federal Housing Finance Agency to bolster its oversight of Fannie Mae and Freddie Mac, urging the regulator to take more steps to ensure the government-sponsored enterprise does not overstep their legal bounds. In a letter addressing FHFA Director Sandra Thompson, Republicans led by Rep. French Hill of Arkansas suggested that the undercapitalization, this is important, the undercapitalization of Fannie Freddie posed a considerable risk to the broader financial system. They're putting this out there that they're undercapitalized, and we could be stepping into a huge problem here. They also urged Thompson to prevent the GSEs from expanding into new areas of finance. LendingTree denies a data breach of 2,000. Real estate commissions change may hurt borrowers. I mean, there's a lot of big changes coming to the real estate market, and I think it's going to be coming gradually. I think the first change is going to be big changes in the mortgage market, like more of what we're seeing now over time, over the next couple months, as we can continue to increase rates. Jerome Powell is set to increase rates in about 10 days, and as that happens, if he does a 75 basis point or 100 basis point hike, it's going to have a very big impact on the mortgage market. We're going to see even more layoffs. We're going to see even more buyers get priced out of their homes. We're going to see even more sellers that are going to be forced to come back down to reality and reduce their prices if they want to find a buyer. What do you think about the housing market right now? We're seeing home builders really getting shocked at all of the buyers that are simply canceling contracts and walking away. Drop your comments below. Where do you see real estate going next, 3 months, 6 months, Q3, Q4 of 2022? Do you think we're going to be stepping into a pretty big recession, or some would call a depression, this winter or early 2023? Drop your comments below. Subscribe here. Subscribe to my second channel. It's going to be an interactive call-in show. It's going to be really, really cool. It's going to be worth the wait. Be sure to subscribe down there. It's pinned at the top comment. If you need help fixing your credit, maybe you want to buy when the market really starts to bring out a lot of great deals, and these deals are just for the taking. You need great credit to get good debt. And the best way to do that is cashnow.video. I have a team of incredible credit repair specialists that are here to help. If you have a complicated credit problem and you don't know if we're able to help you or not, sign up. It's a 5-day trial. Your card will not be charged, and I will have my team look into your credit, call you, and go through a plan. If we can help you, we will help you, and your card will be charged. And if we cannot help you, your card will never be charged, and you'll get free advice. So cashnow.video. If you would like to invest in real estate, you want to learn more about real estate investing, cashnow.video, and join my bi-monthly phone calls, 2 phone calls per month. You'll get access to my cash flow rental blueprint real estate training. And if you'd like to get on the YouTube grind with me, cashnow.video, and you'll get access to YouTube Success Academy, YouTube Success Blueprint, and my bi-monthly phone calls in the community. So be sure to go over there and check it out. Subscribe here and my second channel on LinkedIn, Twitter, Instagram, and TikTok up in the banner. And I'll catch you guys in the next video. If you're interested in being sponsored on my YouTube channel, visit cashnow.video/sponsor and fill out the application.